Hello, today is March 18th, 2023. It is 9:20 in the morning on Saturday. Today's session is titled Let's Not Fall Asleep on a Potential Bullish Case. And this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. Disclosure statement: this post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney, that's me. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. Again, we're just trying to keep clients aware of the moves we made, what we're seeing in the market. Let's hit the charts. Okay, so what we wanted to see last week, if you recall, and there's a lot of things in the news, I know it's scary, but what we wanted to see is, can certain sectors separate themselves from the banks? Obviously, there's a lot of headlines on banks collapsing. We'll see how that plays out, but what we need to focus on is, what is price action doing? Okay, so the IWM, which is the Russell 2000, has a lot of financials in it. So what did that area do this week? Not good. What did the Dow do? Why is the Dow down? And I can tell you my thought process is why nobody wants to invest there is usually people want to invest in the Dow for conservative reasons, for more of a dividend strategy. And there's really no incentive to have a dividend when T-bills are so high. And so it's hard for the Dow to get going. I want to see those areas pick up. But what did the NASDAQ do? Completely unrelated, growth related, completely unrelated from financials. What did that do? Boom, 5.83%. So people are still investing money. They still believe that the market is still okay and is separating itself from the difficult areas. How long that's going to continue, I don't know. But what I wanted to see was this exactly. So what's crazy is, you hear all these headlines and it's still shaky out there. I'm not denying that. But the S&P 500 was up this week. And I can show you what happened and why I'm thinking it's right to have some money in the market right now. Okay? So let me show you this. Okay? So it was a really, really choppy week. We wanted to see 38.80 and 39.12 clear. It was really, really shaky. Thursday morning, okay, I'm going to walk you through this. Thursday morning, you're like, wow, I wish we would have had this day. So do I. But here's what happens, and here's the market we live in right now, okay? Thursday, this big green candle right here, we were at 38.75. Again, what were the key levels? 38.80. 39.12, 38.80, we were right there, and I had buy order ready. Boom, headline hits. One of the banks kind of takes over another bank or fuels the bank with more money, and the sucker moves from down 0.073 to positive 1.8%. Boom, fast move on a short-term basis. Here is this move right here. Early in the morning, we did hold the key support, and it still is. Okay, so we were right here. I had buy order ready. This straight up move, you just can't chase. You just can't, because if I put an order in, I don't know if I'm going to get filled here. It's a difficult situation, so you just got to kind of let it play out. But that was a 2.5% swing. Right there is this week, period. It happened very quickly. There's no excuses. I'm just saying what happened that day. It cleared all levels. So I wanted to see, again, back to this chart, what did we want to see hold? And I'll bring this up so you can see it. We wanted to see 38.80 hold and 39.12 top right. We wanted to see those areas hold. So that day, Thursday, we cleared 38.80, 39.12, and went all the way to 39.60. Boom. That is a change in trend. This, in my opinion, is a nice basing pattern. Okay? So what I did on Thursday, right at the close, to say, I think we'll probably back test some, but in case it doesn't, I need to have some on. So I added 33% at 39.60. thinking we'll probably back test, and we did. On Friday we back tested, and so Friday I spent the day slowly adding, and it's not fun to ever do that because you miss this move and it's impossible to catch it. The algorithm buys on a keyword and you can't chase it. Okay, so you wait and you start adding on these key levels. We got an order at 39.54 and an order at 39.02. The 39.02 literally was the bottom. So we were negative for the week, but again, I want you to focus on price action. I understand that this is frustrating, but we're getting 3% moves a day. And after the market closed, this was much improved. So the market was down 1.1. We were adding throughout the day. Not really that bad of a day. I understand you're like, I hate losing money. I'm tired of losing money. I get it. But I have to add because, again, under the hood, some areas are actually doing okay. Okay, so here's this channel that we're watching. We're right at the 5-day moving average, which is short-term trend, this orange line. This may hold. If we get any help from these sectors, again, this is the week, what did well? Anything growth related, basically. What did poorly? Kind of interesting that energy is dropping off the map right here. And financials. So we're not surprised by financials because of the headlines. But is the market separating itself from the news? And it is. So you have to be objective about that to say, okay, we prevented a significant dip. We've been in cash for 4 weeks. I got to start adding on dips because we are still holding key levels. The key thing that we want to focus on is, did we hold 39.12? We have 2 closes above 39.12. So I have to remain optimistic until that changes. It's going to be crazy volatile. I'm going to take this slowly, but at the same time, we could get better than expected outcomes. Okay. So what I want to see for next week is get above 39.20 and 39.40. And I think that could happen. Would it be interesting that if we tested 40.60, which was the previous breakout, the last Fed meeting, could we test this week? It would not surprise me to get to 40.20 at some point next week. This is holding a key level. We're back in this channel, which is good. So again, there's things to be positive about. We don't have any resolution. We don't know. Nobody knows what's going to happen with the banks. But what I can tell you is, what is price action doing? Is it separating it from the banks? And it is, which is why the S&P 500 was positive. So you can't catch the move on Thursday. It's just not possible. I wish I would have got some of it. Not a good idea. But you got to be careful chasing in this market because the 3% upswings, like here headline, usually backtracks a little bit. So overall, it's difficult. But at the same time, are we objectively basing? What has been my weakness? My weakness has been adding when I need to. So this is good that I'm doing this. We prevented a significant decline for more than 4 weeks. We lost some money during it, but instead of a 10% dip, it was more like a 3% dip for us. So I know nobody likes losing money and it's painful, but the reality is we actually managed this about as well as anybody could. Okay? I wish I could have handled this Thursday better, but what do you do? So we remain disciplined to say, hey, we're holding key levels. On a next down day, we slowly add, and we did that. So we were negative for the week, but I'm liking what I'm seeing, actually. Let's look at some other charts, okay? So what is the New York, the McClennan index showing? Breadth is still not good, but we're getting significantly oversold, which is usually not a bad area for a potential pound. So the S&P 500 degree line went up. We're not changing here because there's still so many stocks. There's still so many stocks in the IWM or financials that are just killing the breadth, okay? So again, you almost have to separate yourself from the financials at this point. If the financials help, watch out, okay? Because if the financials help, this sucker's going to move. Of course, everybody's going to talk about the spread between the 10 and 2. This is actually a good thing. The 10 and 2 is getting closer together, tightening, which is an improvement. It doesn't mean it's a bottom here, but there could be some signs here that we could be bottoming. I want to show you the difference between what I'm seeing in the market. Okay, this is the QQQ, mainly growth stocks, above a 5-day moving average, above all moving averages. Looks like nothing ever hit the tape. You know what I mean? I want to show you that there are good things under the hood, and we own some of this. We were positive on this Friday, so we got a good entry in this almost at the bottom on Friday. Okay, now contrast that with IWM, which is the Russell 2000, which has financials in it. Completely opposite, below all moving average and trending down. Hopefully we get something like this in the IWM, and this can help all stocks. We'll, just for fun, show you the financials specifically. Fun times. I mean, that is a drop off the map. You just got to be careful. Hopefully this base is here. That would be good for the market. Okay. What else did I want to show you? SMH. Semiconductors, just like the QQQ, above all moving averages, like nothing ever happened. So people are still invested here. I want to make that very clear that there are opportunities, and if financials help at all, this thing's going to turn. And I'm not missing another rally. That's my weakness. The preventing the dip part, you're never going to be perfect on preventing the dip, but we managed this one pretty well. So I like the positioning that we have. I want to show you two things that kind of keep you in check. A reminder of how the market works. I want to compare this. This is not 2008. I want to make this very clear, but let's show you a comparison between the performance in 2008 versus 2022 last year. Terrible year. We all know it. Okay. 2022, what did well? Nothing. Defense areas did okay. 2008, nothing really did too well either. What did the next years, even though it seemed like all was lost, the world was ending? What happened the next few years? Great year, great year, great year. I mean, continuous 10 years. Guys, I want to make sure you understand that I'm never going to time a bottom perfectly. I know many of you are considering throwing in the towel, saying, I'll never recover, I don't have time. You do have time. We had a terrible year last year. And the worst thing you could do right now is panic, especially when we just prevented a significant decline. I know I need to improve, but we cannot deviate from the plan. And so right now we are invested. We've prevented a dip for 4 weeks, which was right on cue. And hopefully we can get going here. And if we lose, very, very simple. Okay. If we lose, like the right-hand column says, if we lose 39.12 or 38.80, it's back to protection again. Okay, so I'm following rules, and we will be okay. Another chart that I want to show and remind you, this is probably the most interesting chart. Every year on average sees a decline of 14.3%. I want to say that again. Every year sees a decline of 14.3% on average. And you're like, there's no way. Because you tell me, Jonathan, the market averages 10 to 12% a year on average. That's true. So the market, despite at some time in the year being down 14.3%, the market averages a 10 to 12% return. That is the market. You try to prevent as much as possible. And again, how does the market function? Usually 4 times a year. You don't know when they're going to be, but 4 times a year you have huge rallies. We had one in October through November. Boom. Consolidation. Beginning of 2023, big move. Consolidation. But let's look at the S&P 500. Big move October to December, big drop. January, great straight up move. We tested the bottom almost on cue. And if you look at the key levels to see if they're working, did we hold 38.31? Last week, I'm showing you the last week levels, 38.31. We held. What did we test exactly? 38.05, 38.08. Boom. So the levels work, okay? We have to follow the plan. Right now, we are above the 39.12, so you have to be invested. I know it's not fun. Nobody wants to be invested right now. That's when you should be investing. You have to switch the coin in your head. This is not the time to panic. This is the time you should be considering adding money, and when the time is right, I will add it. If you deviate from the plan, I promise you will never get your money back. Keep optimistic, because we know during times like this, when it tanks and it finally starts to recover and get out of the channel, good things can happen. We're right there. So remain optimistic. I'm going to be cautious. Like, I'm not just going to be the advisor that says everything will be okay. If we go below 3,900, I'm back to protecting. But there's going to come a time, I want to make this very clear, where if we go so low, I have to keep some on at all times, because what happened on Thursday? All seemed lost, and we saw a 2.5% swing on a headline, okay? That's going to happen, and so you have to have some on, okay? So I'm going to stop it there, but I hope this helps. I really like what I'm seeing, and hopefully you see too that this is a basing pattern. It's choppy, 3% moves. It's okay if you have 3% moves like this and the trend is up. When the trend is down with 3% moves, you got to protect. But now we're getting 3% moves and the trend is actually going up. So you have to, in my opinion, it's right to have some on. You're still cautious. We're not going to just get through this bank issue like it's nothing. But is the market separating itself from the financials? And I think it's very clear based on the evidence that I'm showing you. It did. Like, there were areas that did exceptionally well. Growth is still doing well. Okay. One final thing that I want to explain to you. A while ago, in like October, I was talking about T-bills, okay, and saying, hey, this is not bad risk reward. This is a capitulation event potentially. So the 2-year was right around 5% on March 8th. This is panic buying of T-bills, meaning people are fleeing to safety. Everybody thinks the world's going to end. They get stuck in these bills for 3 months, 2 years. They get stuck in those, and the market usually rallies. It's the way it always works. Like, this is textbook. Be cautious in getting too negative here, because everybody panics and buys these T-bills. And right now, this is not a really good rate anymore. It went from 5% to 3.8. I'm not interested in that anymore. You should be thinking more in the market now. So I want to make that very clear. I hope that helps. Thanks, guys. Have a good weekend.